No, you go.
Ready to get started?
Yes.
Okay. Well, welcome to the Director's Cut. We've got about 13 people online. And for those in the room, thanks for joining us. I don't think I have any housekeeping, so I'll pass it over to Lynn for production information for March 2021.
Thank you, Katie. So here we are in May of 2021, and we're doing a look back at the March production, the most recent that's been reported. Happy to report about a 25,000 barrel a day increase in production. That represents about a little over 2%, 2.3% on the oil side. So we are tracking, as far as March, right on the revenue forecast that the legislature put together in March. So maybe they were a little clairvoyant, huh? That was 2 months ago. Oil prices have significantly improved, as you all know. So in March, our North Dakota market price was $56.19. That's 12.5% above revenue forecast. So in terms of the SIF fund and all the buckets that are going to start filling or are going to finish filling, I guess I should say, this biennium, good news there, in that I think there's going to be a little more money available than what it might have looked like in March and certainly back in January. We're back in that cycle of rapidly increasing natural gas production. So we saw natural gas production, on the other hand, jump by 174 million a day, the equivalent of 2 gas plants, essentially, 6.4%. So 3 times the oil production increase. The great news is that even in the face of that, gas capture went up 2%. Now, I know I misspoke yesterday. I said capture was 96%. My 6s and 4s get all messed up. It's actually 94%, 6% flaring. So I apologize if that upset anybody, but we did actually see an increase in gas capture of 2%, even though we saw that massive increase in gas throughput. So that's great news. It really is a testimony to the $20+ billion that's been spent to get that gas flaring under control, get that gas capture happening, and they got the capacity to absorb major increases like that. Now we're still not quite, about 250 million a day, 2 gas plants, a little more shy of the record. So we're inching that direction. We saw production increase those kind of amounts with 6 frac crews back in March. We have 9 working today. So I think we can expect going forward, when we look at April and May and June and July production, we're inching up in rig count. We're inching up in frac crews with 9 frac crews operating instead of 6. We're hoping that we can see like 35 to 50,000 barrel a day back-to-back increases through the summer months. So that'll put us tracking well ahead of revenue forecast, and really a nice gentle recovery in terms of oil and gas activity. We are going to supplement that with more CARES Act work. We are deeply grateful to the legislature for allocating $6 million to us for the reclamation side of what didn't get done the last half of last year. That should enable us to go out and reclaim the remainder of those 280 wells that we plugged that didn't get reclaimed. We reclaimed 134 out of 280, so that leaves us with, I guess I can do that math, 146 sites, and so we will be putting that out for bid very soon. We're going to do it a bit more efficiently than we did in the hurry up days of 2020. So we're going to put crews out there and do all the demolition first, and then they won't be in the way of the people that are taking care of contaminated soil and contaminated gravel and all of that. And so we'll get all the demolition done first, and then we'll come back and deal with all of the soil replacement and vegetation and all of that. So looking forward to that getting underway, and those bids should be coming out shortly. So rig count, as I mentioned, up to 18, slowly improving. But the intel that I gathered this week at the Wilson Basin Conference is no significant increases this year. Next year is where everybody is looking to. They are all starting their budget process, actually, in the very beginning stages of how much capital are they accumulating, and how are they going to allocate that next year. And as you heard in quite a few of the presentations, the Bakken, if it continues to operate the way it is today, is a great place to allocate that capital. So slowly improving, but really the big improvements are going to come next year, after we get through the dead of winter. So we'll live with the gradual improvements, probably, until we're reporting March of 21 production a year from now, and we'll see what's happening. Inactive wells down 8%. Super happy to see that. Completions are tracking the revenue forecast. We anticipated the first 6 months of this year that we'd only be having about 30 completions a month. We had 43 in March and 31 in April. So we're tracking revenue forecast in terms of completions. We are just 73 wells shy of the record. So the record was 16,280, and in March we had 16,207. So at some point in the next couple of months, we're going to break that old record, and we'll be starting to see record numbers of wells producing. Still a little bit of caution, because not everybody is as optimistic as Kelsey Warren about DAPL. A few people are not quite as sure as he is, but it was great to hear his confidence on that. And then even though U.S. crude oil inventories have returned to normal, so the huge buildup during the pandemic on U.S. soil is gone, but there is still about 77 million barrels hanging out there worldwide that has to be worked through before we really get back to where we have demand and supply synchronized and trying to grow together. So OPEC is exercising some discipline, as are the U.S. shale producers, and pretty confident that by New Year's Eve, that surplus crude oil will be gone, and both U.S. and world inventories will be back to normal. So just a couple of things to measure or to mention on the federal front. One is that today, EPA announced that they're going to kick off another set of rulemaking on methane controls from oil and gas facilities. So we are back into the game of hokey pokey. You put your rule in, you take your rule out, put your rule back in, and turn it all about, and off you go. So that's what I call it, rule hokey pokey. And so they're kicking that off. I think it's going to be a slow process, but the Biden administration, President Biden's letter told them that he wanted a new rule ready for publication by September of this year. So watch for that. We'll see what happens between now and then. In our director's cut, we identified for you how you can be part of that conversation if you want to be. There's a website and a place to go to put in your comments. And then on the congressional side, the new information is that, of course, the Regrow Act is out there. Let me see, I have to look at this. Regrow Act, okay, which I guess I couldn't be prouder than to say that the Senate took a look at what North Dakota did with orphaned wells and said, we need to do this on a national scale. And so their goal is to put up to $25 million per year in the hands of state regulators across the U.S. to be used for orphan well plugging and reclamation for over a 5-year period. And I just got contacted today that the House is working on a concurrent bill to be introduced in the House. So as you know, Senator Lujan from New Mexico and Senator Kramer are the prime sponsors on the Senate side. Looks like it'll be Congressman Armstrong, and I'm not sure who he's going to partner with on the House side. So very proud of the fact that we're the model for how orphan wells are going to be taken care of across the United States into the future. With that, I'll take some questions. Oh, I don't want to quit before I mention that we had over 2,800 people at the Wilson Basin Conference. Super, super happy with that. Obviously not the record, but I think it's like our 3rd highest ever. And just to give you an idea of how anxious people were to be back together, 2,650 of those came in person, 166 logged in virtual. So out of 2,816 people, 2,650 wanted to be there talking face to face. So thank you to everybody who participated in that. We truly enjoy putting on that event and bringing in all the folks to show them what North Dakota can do, what we're all about here. So.
Any questions?
I have a whole bunch of questions. It was such an easy week, but let me just start with some of what you just said, though, about the abandoned well, various programs out there. I guess first, so I know we did all this work last year and we're gonna restart and finish some of that work. Do you know when we're going to hope to begin to finish some of the reclamation work this year? And are there more wells that haven't even been touched yet that we would be looking to plug at some point?
Yeah, great question. So a little bit of follow-up on the orphan well program and what's going to happen in the near term and the longer term. So we'll kind of start at the end of that, Amy, and work our way back. We plugged 280 wells. We actually identified 95 additional wells that will need to be plugged and reclaimed. So I could do that math for you, but you have a calculator.
Yeah.
So 95 additional wells. We actually bid out and have workover rigs this week moving on to the first 21 of those.
Okay.
And then there is a group that are on federal land. As you know, the BLM is our partner in regulating those. And so there are a lot of differences in our regulation and, you know, kind of our approach on those that we want to work out before we jump in. So the next package that we anticipate will be that group of 20 wells. And then I can't really see far, you know, in a great amount of detail, but that's going to leave us with about 50 to 55 that probably this fall or this next winter will get plugged. So we fully reclaimed 134 out of the entire package. We are ready to put out for bid the demolition work. So next week we expect that the bids will be going out, or we'll put the bid offer out to do the demolition on the remaining 146. And then we'll be following that up. That work will likely only take about a month. So in July, we should be going back in there and starting to do dirt work, July and August. Now, we'll try to time that to make sure that we're not interfering with somebody's grazing or their haying or their crops. So that may be, you know, delayed into August or September to make sure that we're timing it with agriculture so that we're not interrupting something that's going on there. And then my best guess is that remaining 95 wells that we're plugging this year, those reclamations will happen next year. And we'll take the lessons learned from 2020, which was a hurry up and, put people to work, and 2021, when we're trying to do a revised and more efficient program, we'll apply those next year.
Okay.
Mhm.
The 95 additional wells that are probably going to be plugged this year, where's that money coming from?
So the first batch of that, let me see. So I gotta think my way through this. I may know about one more package. There's a third package that's going to be coming out for plugging. That's about 21 wells, and that's going to come from bond confiscations. So that's out of the 95.
Okay.
That's part of the 95. I told you about 21, and I told you about 20, and then there's another 21. So the first 21 is coming out of the abandoned well fund. The second 20 will be a combination of federal bond confiscations and state abandoned well funds, because the Fed, the BLM has to issue plug or produce letters and that sort of thing. And then this third one will be 100% bond confiscations. And then the last remaining one, which I guess is probably in the neighborhood of only a handful of wells. That only leaves us with a handful. Will probably come out of abandoned well funds, or it's possible if this legislation passes that we'll use the federal money that comes from there. And on the reclamation side, the legislature appropriated $6 million to take care of that demolition and reclamation, and we think that will be able to finish out the project. So that's reallocated CARES Act money. Confusing. Sorry.
I just wanted to follow up on that. Will crews be available?
Yeah, thanks. So the question was, are crews available? Interestingly enough, and glad to report that on the workover rig side, not nearly so much as last year. So most workover companies have gone back to their traditional form of work, but there are two companies and a third to some extent that based on the past few years and then what we did in 2020 actually created specialist teams that all they do is plug wells. And so, yes, they're available. And so we should have adequate, with this somewhat slower approach, we're not trying to do 280 wells in 3 months this time. We're trying to do 95 wells stretched over a year. And we think there'll be plenty of workover crews available. On the other side, demolition and reclamation work, with as little drilling as is going on, there are abundant roustabout and dirt moving crews available, and they are very anxious to get to work. So they've been just patiently waiting for us to come out with these packages and put them back to work. They were watching House Bill 1395 very carefully to see if we were going to get the money to really finish up that project. So we're pretty confident that we've got the people to get the job done, and they're eager to get out there and do the work.
I have a question that's come in online. At the Williston Basin Conference, the governor had talked about a carbon neutral and 2030 goal. Is there an impact, or how could that kind of trickle down through the next few years at Department of Mineral Resources or with our team?
Yeah, great. So over the next few weeks, or maybe the next few days, because I had a conversation with the governor's office today and talked about how oil companies reacted to that challenge and how we need to provide them some structure behind that so they understand it. Their initial reaction was, ooh, this is a new form of gas capture, and every company's got to get to carbon neutral and carbon negative, and that's not what he laid out. What he laid out was a vision for the state to reach those targets. And what the vision is that through a combination of new agricultural practices and bringing in CO2 from out of state, like the Summit Pipeline, as well as capturing our own from gas plants and ethanol plants and coal-fired plants, that we can achieve that on a statewide basis. And so impact-wise, major impacts here at DMR, we're the carbon storage people. And right now we have one employee that does it. So I expect that won't be enough over the next decade, and we'll be looking to beef up that department. As you heard the governor say, what was the number? Was it 52 billion tons of storage capacity in the state on the low side? Maybe 250 billion tons on the high side. Basically, our geology would allow us to take all U.S. energy carbon production for 50 years. So he expects that is going to be a growing industry here in the state of taking carbon and putting it into the Broom Creek and deeper horizons to make our state actually the leader in terms of moving into a carbon constrained world. So in terms of the way we produce energy, there's obviously going to be some impacts in that we're going to be trying to talk to anybody who builds new energy production facilities to be looking at carbon capture, but also in terms of how we do our jobs with the geology and the regulations here. We've got a big challenge in front of us to achieve those. So I came back and told my carbon storage guy that he was the man. Did he need some help?
On that note, you had referenced that there might be a need to provide some sort of like structure to industry about this. How do you envision the state maybe saying to the industry, this is what our plan is, this is what we're hoping you guys, do?
Right. So my conversation with Governor's office today was let's put that framework together, at least the concept conceptually, and the next time the governor has an opportunity to address an environmental group or conference or an energy group or conference, he can hopefully lay that out so that everybody gets a chance to see it at the same time and talk about it. So we're just actually I started a spreadsheet this afternoon to start looking at what that might look like. So sometime in the very near future, press releases and conversations with the governor are going to begin to lay that framework out of what that looks like over the next 9 years.
Any additional questions?
Yeah, just, talking about our oil production for March, it went up a little bit, as you mentioned, so it's 25,000 barrels a day. I don't think you really got at like what was driving that increase, and I'm wondering if it just has to do with the fact that February was a bad month weather-wise. We had power outages. We're coming out of winter. Obviously, prices are improving. Is it sort of all of those factors, or is there anything more specific?
Well, Amy was asking about what was the base for the 25,000 barrel a day increase, and all of those things play a role, but really the key role was that we had nearly 40 duck wells completed, and we saw a significant uptick in frac crews. We went from 4 to 6, and as I indicated, from March until today, we've added 3 additional frac crews. So we should see that pace accelerate. Those are the people that bring the barrels on, and so that would be the dominant factor, is that increase in frac crews, and of course that's facilitated by better weather, and the roads were still frozen. They weren't melting yet in March, and although the weather was nice enough that water wasn't freezing everywhere, the ground was still frozen and they were able to move heavy equipment. But dominantly it was an increase in frac crews, and we're moving in the right direction there.
Well, I want to follow up on that. Where do the frac crews come from?
Thank you. So the question was, where do the frac crews come from? And for the most part, we have been bringing them out of Colorado. Colorado has become an increasingly difficult state to drill and complete new wells in. And so we're in pretty heavy competition with Wyoming. There's a lot of activity along the southern border of Wyoming, trying to tap into the same basin that they share with Colorado. But mostly that's where they've been coming from, is Colorado and Oklahoma. Those plays are still very much asleep, and so people were available to bring from there. Nobody's moving here from Texas. There's plenty of uptick in activity in Texas to put people back to work.
I just had one last thing I wanted to ask you about. So I missed your speech at the petroleum conference.
Oh dear.
I know, I'm sorry, but I heard I heard that you had some thoughts on what Kelsey Warren had to say regarding the petrochemical industry and how, oh, we're never going to have a petrochemical plant in North Dakota. I was just curious what those thoughts were.
Yes, so the question was my comments about value-added natural gas in North Dakota and what Mr. Warren had to say. And I prefaced it by saying it might be dangerous to disagree with Kelsey Warren because he's a pipeliner. He has spent his entire life building pipelines and moving hydrocarbons around the nation. So, that's his natural go-to. And his understanding of the plastics business is you have to be next to the ocean so you can put your value-added natural gas product on the water. We disagree. We went to Alberta and we saw that you can do it in the middle of a continent in one of the coldest places on earth. And so if you can produce plastic feedstock and actual plastic particles in central Alberta and ship them to people that turn them into the products that we all love and consume, you can do it in North Dakota. So we respectfully disagree, and we think we're doing all the right things. We're funding research to prove that we can do salt cavern storage. We're funding research to prove that we can produce blue hydrogen here, and the plastic feedstocks are one of the offputs of that. And we're funding some work on utilizing our ethane and research in that area. So that was the fundamental disagreement. Respectfully disagree. Alberta, I believe, has proven that you can, in fact, do value-added natural gas in the middle of a continent in a cold place. And our goal is to replicate that here on some scale.
On that note.
Thank you very much.
Perfect.
Perfect. Ready? Okay. Well, good afternoon, everyone. Justin Krinkstead, Director of the North Dakota Pipeline Authority. We'll get right into some of the production updates. We did see some more data trickle in from Montana over the last couple months, and so I know that last month we were showing Montana down in the 30-some thousand barrels per day, but that has upticked as they've gotten some additional well information in, so that was encouraging to see for them. Still 0 drilling rigs active in both of those two states, so I don't anticipate any growth anytime soon until we start to see an activity ramp up in those parts of the play as well. I'm just following up on, excuse me, some of Lynn's comments about production. Some interesting little tidbits here as I was digging into this. about a 7x difference between the natural gas and the crude oil growth. And typically we're in that 2 to 3 type range. So it was very significant and definitely noticeable. I also did some quick calculations and just looking at where we are today from where North Dakota was at the peak back in November of 2019 for both oil and gas. And so oil is still down from the peak 27%. Natural gas is only down 8.4%. And so we are still much closer to that peak level on the gas side. If any of you were able to tune in to my presentation on Wednesday, it was continuing to look really closely at gas oil ratios in North Dakota and how that's going to continue to evolve over time in the state and lead into those discussions about gas capture and things. So I'll touch on that here more in a moment. So now, again, getting back to the crude oil side on the transportation movements, you'll see here on the next slide, we'll go to slide 5. We did see a bit of an uptick in the utilization from a market standpoint for crude by rail out of North Dakota. And again, just a slight decrease in the amount of pipeline movements in the region. But if you look at the last number of months, that's still within kind of a normal range that we've been bound in here for quite some time. When we look at the volumes on slide 6, right around 200,000 barrels per day being moved out by rail car in the month of March. We did see, as far as February goes, that's the latest we have for destination information. We saw an uptick in the amount of market share going to the East Coast and a decrease in the market share going to the West Coast. And if you think back to February, what was taking place during that time frame, that was when the Gulf Coast was largely shut down for a period of time, less production that may have otherwise been going to the east or PAD 1 portion of the U.S. out of potentially the Gulf Coast, then being met by some additional market share of North Dakota crude going that direction. And you'll also see way down at the bottom in orange, we did see a very minor uptick in crude deliveries to the Gulf Coast for the first time in a couple months. But again, North Dakota during that time frame largely being able to continue operating while those other major producing areas of the U.S. were shut down. So that key importance of infrastructure and having the ability for North Dakota to backfill and meet some of those nationwide needs was certainly critical at that point in time. What prices we're doing in the month of February, we're still seeing PAD 1, PAD 5, East and West Coast being the highest priced markets, followed up by the Gulf. So everything is continuing to stay fairly static at a large picture view. I don't anticipate any major shifts in crude by rail utilization out of the region as long as Dakota Access continues operating and other systems are able to stay online. And then where everything sits today, again, north of $65 at Cushing, the Gulf Coast at LLS, sweet crude price down there, almost $2 higher. And so there continues to be that incentive to move North Dakota oil through Cushing and then also down to the Gulf Coast, either through Dakota Access or other interconnects through Cushing. So the pipeline markets continue to look very strong. Crude imports, exports, again, nothing really out of the norm here as far as barrels being moved north and south from North Dakota and Canada. And then on slide 11, we're getting into some of the positive news that Lynn had already discussed on natural gas. And so, again, 6% flaring, market share, 2% of flaring from wells that did not have a pipeline connection, and 4% from wells that were connected but still flaring for various reasons. And then when we look on slide 12, again, just highlighting that downward trend, North Dakota continues to be in a real positive situation in the near term as far as gas capture infrastructure goes. On slide 13, this is one thing that did jump out to me. We'll keep a close eye on this next month. We don't like to see when that red line is above the black line. That means more wells were coming on producing gas than new wells being connected to gas gathering. And so hopefully that's just a one-off month and that we see that start to correct itself. Otherwise, in the past, we've seen if you start getting behind, then we start seeing an uptick in flaring. So we'll keep a close eye on that. Again, I hope it was just a seasonal issue and that things turn around really quickly on this front. And then you'll see in a moment my long-term gas outlook, and it is tied to the EIA's crude price forecast. Almost an identical short-term outlook from the EIA from April to May. They really did not change much at all. So they're expecting a continued view that as we move into summer, we might see some downward pressure on prices. But again, that long-term outlook remains very strong. And for North Dakota, we have a tremendous amount of drilling inventory that is economic at those prices. So we do have a continued long-term strong growth outlook for the region. On the gas flaring side and gas capture, again, both within the bounds that were set by the Industrial Commission. And as I noted a minute ago, still in a really, really good position right now, at least for the next 2 to 3 years before we start needing additional, at least from a processing standpoint, capacity added within the basin. And then long term, again, this was one of the points that I was discussing at the Williston Basin Petroleum Conference was what can we expect as we look out over the next 5, 10, 15 years. We are continuing to see well performance when it comes to gas production, continuing to be stronger even than anticipated. We've known for years and we've been watching and planning for increasing gas oil ratios, but they're continuing to even surprise us, even though we were expecting increasing levels. So we're going to keep a close eye on this. You may see some updated forecasts from me in the coming months as I start to incorporate some new data that's coming in and some new analysis on this front. So we certainly, that was one of my key messages, was the gas capture industry not taking their eye off the ball even for a moment, because while we are in a very good position today, that can quickly change if we see strong production changes and it gets to a point where the infrastructure can no longer keep up. And then on slide, we'll kick forward to 18, continued high utilization of Northern Border by North Dakota production, upwards of near 80% market share now on Northern Border is coming from North Dakota. We have seen, though, some positive movements in what's happening with the BTU, or the energy content on Northern Border. What's driving some of this is some higher ethane capture rates within the Williston Basin from some of the gas processing plants. Ethane prices have improved recently and right around 25 cents per gallon now. And so we have seen some additional ethane leaving North Dakota, going north up into Alberta to that petchem industry, as well as additional ethane going down to Kansas and the Gulf Coast as well. So again, it's market driven. If that market turns around and we see prices return to the weaker ethane scenario, that ethane will likely get right back into North Dakota's gas stream, and we will see Northern Border's BTU start to ramp up again and potentially become an issue at the FERC level. With that, I will be glad to answer any questions.
Yeah. You had mentioned that right now processing is good, and it's going to be for a couple of years, correct?
Correct. Yeah.
Do you know of plans beyond a couple of years? Are there plans for processing beyond a couple of years?
Yeah, and so the question was some of that long-term viewpoint for gas processing in the region and what's in store. So there are a couple of facilities that will be expanding. The turnaround will happen this summer with the Hess facility. They're going to add another 150 million cubic feet per day of processing. Some additional ONEOK projects that are still in the works to come online. And then certainly those discussions beyond what's on the public announcements now, those discussions are still moving forward. Folks are still looking at what opportunities are there, what's the right position, where's activity going to be in the play. Again, it really becomes not an if, but when, and what's the right timing and size and scope of those projects.
And just as a follow-up, are any of the plants going to be down for maintenance that you know of?
Right now, it'll be the Hess facility.
Yes.
Yeah.
Going back to what you started with, how the difference between the production increase in natural gas and oil is like 7 times what it usually is, or I can't remember exactly how you phrased it, but what do you think accounts for that like huge just difference this month?
Yeah, so the question was why 7 times the difference between oil growth and natural gas growth? And I haven't, having just gotten the data less than 24 hours ago, I usually don't like to speak without data in front of me to point to something. Lynn, other than the geography where those wells and where production is coming back online, I don't know, Lynn, if you have any thoughts, but.
Sorry.
Yeah, without, certainly something we're going to dig into though. I know where activity is focused is certainly a gassier part of the play, but it has been for the last number of months. So yeah, maybe it's a one-off, or maybe it's a beginning of a trend. We'll see.
I've got a couple questions, Justin, that have come in related to the Colonial Pipeline shutdown. Refineries in the Gulf Coast have been concerned about that outage not being able to take fuel. Did transport to the Gulf Coast, region change much in the past week?
I don't have any data to suggest that it's changed. I don't suspect that it has. Just given the fact that production in North Dakota has continued to roll forward. We do not have large storage in North Dakota, so that that crude would continue to have to go down to storage either at Cushing or the Gulf Coast. So as far as transportation changes as a result of that out of North Dakota, I have not seen any.
And then just to follow up with that, if you have any additional information, can you just kind of generally speak maybe how kind of hacking like that may happen on a large line like that, or have you had any conversations on with North Dakota operators on preventing some type of security attack like that?
As far as the first part of the question, do I have any details of how it happened? I don't. I'm certainly not a cybersecurity expert at any level, so I hesitate to speak on that. As far as security goes, that is of utmost concern for all pipeline operators. It's before this happened. It's not only physical security at sites and monitoring, but then also from the cyber side and operations. And so they're very aware when you look at what happens globally and challenges and terrorism threats and different things. Pipelines are a target, and certainly that's taken very seriously by the operators as well as by the government agencies that oversee that.
I was wondering if you just had any like key takeaways from the conference this week. Was there anything that you heard that you thought was particularly interesting, or something that we keep in tabs on? Taking away, it was just really good to see folks again in person and be able to catch up on some of the finer details of things that you don't necessarily catch in earnings calls and through other means out in the public domain. And so it was very encouraging. Again, a lot of optimism from folks out there. So when we look forward, it gives me some confidence in some of my forecasting work that I'm trying to, again, remain reasonable that we should expect growth and we should be planning for it from an infrastructure standpoint.
All right. Well, thank you so much.
Okay.
I think that's it.
Thank you.